I laugh sometimes when you see headlines like the Australian housing market did X, Y, and Z last month, and you just look at that and think, that's so lazy. There is no Australian housing market. Every state and city has these incredibly different drivers, and you just need to acknowledge that.
If you want to know how our Australian economy is travelling, where our opportunities are, where our challenges are, how the Perth and Western Australian market is performing, and what our future looks like, join us on this episode. I've invited Daniel Gradwell along. He's an economist and property specialist from ANZ Bank. He's spent all his time trawling through the data to pull this together in a relatable fashion, and he's going to share some really powerful insights. Come and join us. So how do you do it? Because some people would think, economics, it's a bit dry.
Oh, no. Not at all.
Tell us about, unpack that a little bit. That's really fascinating because from the outside world, economists get a pretty bad rap for being, you guys are just boring and...
Yeah. Well, that's fair. And even when I was studying economics at uni, I thought the economists that they have on TV, you watch the 6 o'clock segment or whatever, and they'll have the market movements of the day, and they're the most absolute batshit boring. Sorry, I'm probably not.
That's right.
The most boring people that you'll ever see presenting this stuff, and I'm thinking, who could be watching this and enjoying it and taking anything away from it? So for me, I think fundamentally, I just love data and searching for themes and trends. That's what I enjoy, and putting charts together and that sort of thing, and connecting relationships. That's what I find fun. But then the second part, and this is probably the role that I do now, is helping other people understand that story as well. So I totally appreciate that people don't want to go deep diving into ABS data and that sort of thing. And if they go and see an economist speaking and they've got 40 charts to get through and it's really text heavy as well, that's way too much for the average person to process. That isn't familiar with looking at charts and interpreting stuff really, really quickly like an economist would do. So I always try and keep things, I suppose, at a bit of a higher level, digging down where you need to, but making sure I'm actually explaining what's happening on the chart. And then the key piece is relating it back to the individual and their business and saying, here's what you should be thinking about when you're making your decisions going forward, whether that's, business investment thoughts or your personal finances and that sort of thing as well. So yeah, it's trying to identify the key themes in the data. I like doing that by myself, but then I get a bit of a kick out of explaining that to people and sort of see them thinking, oh yeah, that's an interesting point. Hadn't thought of it that way before. So there's a few pieces to that I think makes economics and data in general pretty interesting and exciting.
Why did you get into economics? Why the fascination?
The first thing is that it was the only thing I was good at. Economics and accounting, to be fair. It absolutely just resonated with me from the start. I was all right at other stuff, to be fair. But economics really just resonated, and I just love the idea of stripping things back to supply versus demand, and I just find everything can be answered through that sort of lens if you think deeply enough around what's driving those supply versus demand stories.
That could be very uncomfortable, Daniel. If I go home and tell my wife everything's predicated on supply and demand.
Absolutely.
I don't know if that
your entire relationship.
Yeah, that's right. It's not a very feeling response.
No, that's true. It's not. And you do need some emotion in there, I suppose. But that's what I was alluding to before around the assumption that people are rational, and that's really a key cornerstone of the study of economics is, the rational consumer. But that's just not the case at all. And the belief that everyone acts in their own self-interest. Like a lot of the time that's true, but geez, people are better than that. People do care about the society that they operate in. They care about their friends, family, neighbourhoods and that sort of thing. So the base assumptions in economics leave a lot to be desired, I think, but increasingly you can make better assumptions when you have a better understanding of the data. So I think that's kind of the exciting bit for me is where do the data that we're looking at tie into individuals' decision-making in that psychological process.
One of the things I really loved about how you do what you do is you do all the data work. I find you're really relatable, but you go out in the field and you almost sense check your data.
Yeah.
when you're travelling around? Tell me a bit more about that, how you do that, why you do it.
Yeah, absolutely. So it's to be clear, national role based in Melbourne, and like you say, travel around to pretty much all of the capital cities and a bit into the regions as well. And the thing there is that when you think of Australia, you know, I laugh sometimes when you see headlines like the Australian housing market did X, Y, and Z last month, and you just look at that and think that's so lazy. There is no Australian housing market. Every state and city has these incredibly different drivers, and you just need to acknowledge that, because otherwise I think what you're providing just isn't going to be of value to the people on the ground that you're talking to. So like I'm in Perth at the moment, obviously I'm really digging into what's happening in the Perth economy, but always comparing that across what's occurring in the other states and territories as well, because I think people and businesses are so comfortable these days operating across those state borders. So they do find it interesting, even being based in Perth, what's happening in the likes of, you know, southeast Queensland versus Victoria, for example. And, you know, I think I was telling you earlier, I've been to Tasmania was the last trip that I did, and that was pretty doom and gloom down there. Things are pretty weak. So it's those little anecdotes that I hear on the ground as well can then help to inform the view, I think, as well. You know, a Tasmania example is when you fly into Hobart and Launceston I went to, and from the mainland you're sitting there thinking, geez, this is nice and green, isn't it? A beautiful place, and reminds me of home, like New Zealand as well, obviously. But then the people in Hobart and Launceston are talking about how dry it is and they desperately need some rain and everything's brown. And that's a good example, because everything is just relative and what you're used to. And as an outsider, if you just fly in and don't talk to anyone, you think, geez, it's green and wonderful. That, you know, the conditions for agriculture must be absolutely fantastic down here. But then talking to people, you're understanding that's really not the case at all. And if you're not an expert in that, you can't identify it by yourself. But then that becomes really important when you're having subsequent conversations with people, and it helps you relate a bit more to what they're seeing and experiencing on the ground, and thinking about the decisions that they need to be making and the assistance that they might need as well is a good thing that I'd throw in there from a banking point of view as well, and being really aware of the challenges that they're facing.
And I'm just thinking this through. It's almost an unusual thing for me to hear. I love it, but it feels unusual to think that an economist from a bank will go and listen to people on the ground and feed back something to the bank that people need. It's not the commentary you hear in the media.
Sure.
It's fascinating. Do you find that the media's take on, I think they bank bash a bit too much in some ways. I don't know if that's true or not, but I'd like your take on it. And perhaps also a comment on how the economists feed into the banking system's thinking. Yeah,
absolutely. I probably wouldn't contribute too much on the bank bashing side of things. Absolutely, there's people that have done the wrong thing at various banks, and you can probably say that across all industries, right? That individuals make incorrect decisions, and that does have really tangible impacts on people. And I think that's really the key point there from the banking point of view. And even though I'm not a frontline lender having those conversations every single day, you know, for me it's more when I'm traveling around and I'm interacting with people face to face. That's when I have those conversations in more detail. Absolutely being aware that we're providing a really valuable service for them, and therefore you need to really deeply understand what they as individuals and businesses do and what they require. And perhaps that sounds unique from an economics point of view, but that's not unique for the frontline bankers that absolutely are having those conversations every single day, and really keeping abreast of their customers. So there's an incredibly important and valuable value add, I think, that the banking system provides into businesses that are really essential to, you know, support economic growth across the country, really. And naturally that flows through into the individual side of things as well. We always focus on businesses and from a property point of view, development or investment in commercial property, for example. That really is coming from a business lens, but then it also relates back to the individuals behind that business. What are their requirements in terms of their mortgage or any other financial decisions that they're making as well? So I think it's really important to be aware that these are real people with real challenges and opportunities, and basically we just want to help them make the most of that as best we can. And that's probably the cool thing about my role, where it's not straight economics and I do the work and then send out a report and that's the end of it. It really is trying to bridge that gap between the data and then translating that into individuals and their businesses. And also a bit of a banker education piece in my role as well, to help those frontline bankers have better and more detailed and granular conversations with their customers in turn.
I've seen that in practice, and I can vouch for it to say it has a really powerful impact.
Sure.
And I'll qualify my comment previously. I think, and it's not just in banking, generally people tend to focus on the negatives and media picks it up because it makes money, is my take on it.
Of course.
We often don't talk about the positives. So those are some of the positives. The banks spend millions of dollars on data. They do, obviously there's self-interest involved. It's a business. But they're very good, I find, at sharing that information. And whether people like it or not, even though the bank protects themselves, it actually protects other people too.
Mm.
So a great example I would use of that is in, say, property development that we were speaking about this morning. There's a story I heard, or a conversation we were part of, where the bank's doing due diligence on builders and they're looking at cash flows, work in progress. Basically, they want to make sure that the builder who's building that project can complete it and not get themselves into trouble. Obviously, that protects the bank, but it protects the developer too.
Yes.
And it protects the consumer who's going to buy that product.
Yeah. And I'd add potentially it protects the builder as well, because a lot of what we've seen over the last couple of years, where we know that the construction sector has been under massive pressure with cost escalation and material supply issues and that sort of thing, is a lot of builders are starting to work their way up the risk curve. They might have a really good and solid experience and background building, 5 or 6 high-end townhouses, for example, and then they suddenly want to make a step up to a 20-unit complex, or maybe a 6 or 7 unit apartment development, for example, 6 or 7 story apartment development. And we want to have a really good understanding of, are they equipped? Do they have the expertise that they need to make that sort of step? Because sometimes the ambitions can outweigh, the equity or the expertise that's available for the builder as well. So I agree with you. It's protecting all of those people, including the bank, but it's absolutely looking after the builder at the end of the day as well.
Yeah, substantial value as I see it. I'm going to pick your economics and property brain now. Because
Sure.
You're an expert in it. Can you give us a view, a macro view, what's happening in the world, Daniel, and then maybe break it down to what's happening in Australia? And I'd love you to give us a take on Western Australia, where we are, where you see us going.
Absolutely.
Yeah.
Absolutely. So that's a pretty broad question. So interrupt me if I go off tangent. But absolutely, that's the right way of framing it, I think, is starting with the big picture global macro view and then starting to hone into Australia and then Perth. The key thing that I always think of is that Australia, while we're large from our own point of view, in the global context, we are a very small island, geographically quite remote. And that comes with a lot of challenges as well. And it means that so much of our economy is built on trade, exports and imports, and we're therefore so influenced by what's happening in the world around us. And the example that I've been using recently is you look at the reaction to the federal election the other week, and that was basically muted. There was no response in terms of markets. But then you think about what's happened over the last 6 weeks in particular in response to Trump's commentary around tariffs, the up and then down again nature of that story and where that's settled. And I know we've got a 3-month respite now, so we get to do it all over again in
Yippee.
August, which is fantastic. It gives us something to talk about as an economist, so I can't really complain. But we see that every time there is announcements or data coming out of that story that has genuine market moving impact. And you might just think, that's a headline on the news, but that does have real impact on people's borrowing costs, especially in the commercial property space. We're seeing BBSY movements have really dropped off 40 or 50 basis points compared to where we were a couple of months ago. So that is having some real tangible impact, and we're seeing customers increasingly comfortable locking in some rates in expectation of lower interest rates coming through. The reason why the market and economists, to be fair, ANZ as well, are expecting lower interest rates is on the back of that volatility, the uncertainty that's being provided by tariffs and not knowing exactly where that's going to settle and also what that's going to mean from an economic growth point of view. So the key thing there isn't so much whether Trump puts 10% tariffs on Australia. Our exports directly into the US are only about 5% of our total exports. So that's not a huge story. Obviously, that does impact the businesses and the industries directly affected. But generally, from an Australian economy point of view, it's just not that large to really derail us. But the bigger problem becomes the relationship with China and whether China and the US and their reciprocal tariffs, whether that weighs on Chinese growth, because that's really the key driver for the Australian economy. About a third of Australia's exports go directly to China. So anything that slows down Chinese growth is not good for the Australian economy. That's particularly important sitting here in Perth. We know a lot of our exports, iron ore primarily, but really broadening now into those critical minerals as well, which is a really good diversification story, actually. Maybe we can talk to that later on. But that's important because anything that's potentially going to weigh on the Chinese economy, the demand for steel or construction drops off, demand for iron ore falls, so we might be sending less over there. We'll probably be getting a lower price for what we do send as well. And then that impacts the mining businesses here, potentially the individuals working there as well. It impacts on government revenues from royalties. So it really does flow through potentially quite dramatically to the Australian economy. So that's really the key thing to be looking at going forward when there's this commentary around tariffs and potential trade wars. It's not just Australia's relationship with the US, it's more broad than that, and it's really our connectivity into the Asian region and whether that's going to weigh on growth here.
Can I ask you a question on China?
Sure.
Given that a third of our exports are to that country, what I've heard, it may not be true, you might be able to ground us, is that China's increasing its domestic demand, so internally focused, to keep their economy going. Do you think it's likely that their exports to the rest of Asia and Europe will make up the difference that they're expecting in the drop of trade to the US?
Yeah, and that redirection of trade flows is something that you can actually already see if you look at things like shipping volumes. There was a great big rush of ships leaving China, heading to the US before those tariffs were first implemented. That's dropped off quite dramatically now, but then has been largely offset, maybe not 100%, but a large volume of it has been offset by China exporting into other parts, especially in the Asia region as well. So that's one thing that might happen in Australia if there are excess Chinese product that needs to find a home somewhere. If that home isn't in the US, potentially it comes into Australia and maybe even at a lower price than what we were anticipating, what we've previously had as well. So that could almost be one small benefit for us, actually, which is quite interesting in the context of tariffs are usually increasing prices from a global point of view, because obviously that flows through to higher prices for the end users that are purchasing those goods. So that is occurring. The degree to which that happens is basically impossible to try and estimate going forward, and I do think the flow of those ships exporting from China into the US will pick up from here, at least over the next 90 days, now that we've got a bit of certainty and the tariffs have been walked back a little bit. It's not as bad as what we were sort of expecting a month or so ago. So that's good news, but that's potentially one channel to keep an eye on as well. And then we can start to think about what that means for the Australian economy, and it's probably fair to say that we're in a really good starting place right now. Maybe really good's a bit too strong. Maybe good or solid is more appropriate in hindsight. I think we've done really, really well to weather the storm. Not really thinking of COVID there, but more around higher interest rates, the way that the economy has remained pretty resilient. We've still seen GDP increasing. The labour market has been particularly strong. We've spent about a year and a half now with unemployment bumping around 4.1%. So that's an incredibly strong outcome in the context of those really rapid rate hikes. And I think that's probably better than what the Reserve Bank and governments as well would have expected when interest rates started to increase. I think it was May 22, so bang on 3 years ago now. So that gives us a really solid foundation, and it means that the Reserve Bank has a bit of ammunition to support the economy in terms of lower interest rates if they deem that necessary to support the economy. We've already seen one rate cut this year. The ANZ research view is that we'll get 3 more as we move through this year as well, so a total of 1% drop as we move through 2025. And that's really on the basis of general uncertainty isn't good news for business or households. So lower interest rates are sort of supporting a bit of confidence there, ideally supporting a bit of spending and helping business investment decision making as well. So that's where we sit from an Australian point of view. And then you can think about Western Australia. And fair to say, WA has been outperforming the rest of the country for a number of years now, really since COVID arrived. So that's a good 5-year run that you've experienced out west. And I think the foundations are in place for that to continue. You've got this really good dynamic at the moment where both the private and the public sector are contributing to growth. And it's really challenging to get both of those drivers working together at exactly the same time. We know that public finances for the state government in Western Australia are probably the best in the country, forecasting budget surpluses over the next couple of years. Like I mentioned this morning, that's something that the likes of Victoria can only dream of, running budget surpluses. So there is a real gap that's opening up across the country on the public side. And then on the private side, we can say things like Western Australia has the lowest unemployment rate in the country. That's a really good starting point. We're seeing growth across a diverse range of industries. Retail spending is running ahead of what's happening across the Australian average as well. And then you've got this really strong housing market. And while that absolutely poses some challenges in terms of housing affordability, and I'm sure we'll talk to that shortly as well, it does mean that we're seeing this wealth effect coming through where people feel a bit wealthier as their home value increases, and that supports the retail spending story. Retail spending is about half of the Australian economy, so that has a really direct impact in terms of supporting further growth. And then we can say things like your population is growing faster than the Australian average as well. Overseas migration is really important. That's important everywhere across Australia. But Western Australia is also attracting more people from other parts of the country too. So that really gives you an extra kick, and I think means that your population growth will grow faster than the Australian average for some time to come, and it leaves you really well placed.
Interrupt you
yeah,
for a
please.
second. Is there any data that you've found that explains why our population is increasing at such a rate?
A lot of it will just come back to the outperformance of your state economy. So that's really a chicken and egg relationship. If we go back 10 years ago, you were losing people to other parts of the country, and that was because you'd come off this massive mining boom and the economy was in the doldrums for a few years in Western Australia. So you were losing people. But then since COVID, that's really flicked a switch, I think. Like I mentioned before, unemployment rate is lower than the rest of the country, so you've got really good jobs on offer. A surprising fact, actually, is that average incomes in Western Australia are higher than the rest of the country, actually the highest. I think typically people would expect New South Wales and Sydney to have the highest incomes. A lot of that is driven by mining, so it's into the regional areas and fly in, fly out and that sort of thing. But a lot of that money then gets spent in Western Australia as well. So you've got a strong economy, plenty of jobs. And one thing that I touched on just before is around housing affordability. Even though you've had this really strong increase in housing prices, you've looked really affordable for a number of years now. So I think that has supported a lot of people moving here. And it's not necessarily people moving here, but it can also be fewer people leaving as well. I think a lot of people don't feel the need. I'm thinking of young graduates in particular are typically the most mobile sort of people before they get older and have families and settle down and that sort of thing. They don't need to go looking into Melbourne or Sydney to further their career now because the job market is really good domestically, the salaries are okay, and for the last couple of years, getting a bit more challenging now, but they have been able to get a pretty steady foot into the housing market as well. So there's a few different reasons there that are supporting that interstate migration story.
Can you talk to us a little bit about the residential market in WA?
Yeah, absolutely. And I've sort of mentioned a few times now that you've had this really strong market. If I look at the last 5 years, we can say that Perth prices have increased the most out of all the capital cities across Australia. Perth prices are up nearly 80% in 5 years, which is just an incredible run. And naturally, that'll be different across asset types and suburbs and streets and that sort of thing. But overall, that's the environment that we're looking in. You've been followed not too far behind by Brisbane and Adelaide. Prices there are up 70, 75%. And then Melbourne is down at the other end of the spectrum with prices up 10%. So that's kind of what I was getting at before when I mentioned the air quotes that no one can see, Australian housing market. They're so diverse, the difference between Melbourne and Perth, Brisbane, Adelaide over that 5-year period is just incredible. So for Perth, you've had this strong run, prices up about 80%. A lot of that just comes back to supply versus demand. I've spoken about the population growth coming here, the jobs on offer, incomes are high and increasing. But then the supply side is just so challenged. The supply story is really hard across most of the country, actually, but it's probably the worst in Perth. And if we look at housing construction costs, most parts of the country had an increase in construction costs through 2020 and 21. A lot of that was just COVID driven. We weren't getting the shipments arriving on time, so there were delays and material costs increasing. Construction costs started to come down after that period, but then for the last year and a bit, they've really taken off again in Western Australia, which they haven't done in other parts of the country. And I think the key thing there is that there's just so much competition, not so much on the material side now, but it's more about the physical labour. There's so much demand for contractors and workers and subbies and all of that in Western Australia. There's about $34 billion worth of work under construction at the moment. That's across housing, non-residential property, so that's things like commercial buildings, offices, industrial, retail, also including education and healthcare and that sort of thing. And then the engineering side as well is the largest part of that backlog. So that includes things like road and rail works. It includes increasingly electricity and water work too. And then, of course, the mining sector as well is the largest piece of that. So there's so many different drivers here that are scrambling for those workers, and there's only so many workers to go around. And what we typically find is that both the mining sector and publicly funded infrastructure projects, they have much deeper pockets than what your private housing developers do. So that means that the housing market kind of gets squeezed out. All these other projects get the priority, and it means that there aren't enough workers to go around to complete the housing that we need. So if we strip it back to supply versus demand, it therefore becomes pretty clear why there's been this really strong increase in housing prices. One thing I would say, though, is looking at affordability. And ANZ Research did this really cool report every 6 months with CoreLogic looking at housing affordability. And they look at the capital cities and they see what percentage of the average income is needed to pay for the average mortgage. And for Perth, that's increased from about 30% 5 or 6 years ago to 45% of the average income today. So that's a pretty sharp adjustment. That's on the back of higher interest rates and higher prices, of course. But that 45% is really in line with the national average now. So it hasn't blown out to terribly unaffordable levels. On the other hand, if we look at somewhere like Sydney, which has always been really expensive, in Sydney you need a bit over 60% of the average income to pay for the average mortgage. So where I have a bit more concern isn't so much Sydney, because that market is used to really high prices. But if you look at Adelaide, their affordability has worsened really dramatically. now you need about 55% of the average income to pay for a home in Adelaide. So that starts to look quite unaffordable and stretched, especially compared to Perth sitting around 45%. So what that means going forward, if we're saying for the Perth market, affordability has definitely worsened, and we shouldn't lose sight of that because that does pose real challenges for individuals and households. But it doesn't look like it's at any sort of breaking point yet, given how strong the underlying economy is as well. So we'll keep that in mind, and then we think about that supply versus demand dynamic. The demand, it looks likely to continue. The population story is still really positive. Might slow down a little bit as overseas migration slows a bit, but the interstate piece is still going to be really important. So the demand is still there for housing, but then the supply side is really, really difficult to correct in a short period of time. And you'd absolutely love it if we could just suddenly allocate 5 or 10,000 more tradies to go and build a whole bunch of homes across Western Australia, especially in Perth. But that's absolutely not realistic. That can't happen until we work through the backlog of the infrastructure and mining projects. So it's really hard to see the supply side improving anytime soon. And I think that probably means that you see a bit more upward pressure around prices and probably also rents as well in the housing market, at least over the near term.
That's very interesting because obviously we run a finance broking business. And I've noticed on the residential side, even though supply is really tight, the prices our clients are paying for homes aren't increasing at the levels they were 6 months ago. So it's cooled somewhat. Do you have any insight into why that might be?
Yeah, and I think that probably is starting to come up against that affordability sort of level. Absolutely, price growth has slowed down a bit from the peak 6, maybe 12 months ago. But prices are still increasing, and they're still going at a decent clip and faster than most other parts of the country. So what I would say is that that's probably an ideal sort of outcome, really. We don't want prices continually increasing at 20% year on year like what they did for a little while. I mean, some people do, obviously, and potentially some listeners to the podcast. But from an affordability point of view, that's not great news from a society lens as well. So a bit more slow and stable increase, I think, is to be welcomed, and potentially more just in line with income growth, because then that keeps your affordability story consistent if both house prices and incomes are increasing in tandem.
And of course, that's also subject to where the location of the property is. So your coastal strip, that's still going to go. There's going to be demand because the supply is so short.
Yeah, that's absolutely right. And typically we see some difference between existing suburbs versus greenfield, for example, and the existing, like you say, in-demand areas are probably going to outperform. There'll also be some differences. Housing prices might see a bit more growth in apartments and that sort of thing. But absolutely, just like I said, there's no Australian housing market. There's almost no Perth housing market either, because it's so different across the segments and the locations as well.
I've got an infrastructure question for you.
Sure.
So you mentioned there's roughly $34 billion of projects that are backed up.
Yep.
So that's I'm taking that's not pipeline. That's backed up. They're already in progress.
Correct. Already underway. Yeah.
That sounds fairly large.
Yep.
A percentage of that's in mining, so it's private sector. A percentage of that is in the public sector.
Yeah.
Do you know what the balance would be? Where's the weighting?
Primarily private because of the mining sector. Top of my head might be 75% or so private. That's when we take into account not just the engineering stuff like you mentioned, but also housing and the non-residential side of things as well, like industrial approvals have seen a really large increase lately, and there's a lot of industrial work that's slowly coming through the pipeline as well. So I think it'll be roughly 75-25. It'd definitely be predominantly private anyway.
It's probably another conversation, but I'd love to dig into the public projects, what they are, and whether you think we're investing enough in public infrastructure to meet our needs over the next 5 to 10 years? Because you do also take a slightly longer term view of things.
Yeah, absolutely. What's interesting is that there's more water and electricity projects, like I mentioned before, that are coming to the fore now, and that hasn't really been the case. Typically, when you think about publicly funded infrastructure, it's road and rail projects are really the key to. And they're absolutely important. And I know you've done some massive Metronet projects, for example, over the last couple of years. That's probably winding down a little bit now, but it is being replaced by electricity and water. And there's really two different dynamics there, I think. The water piece is really important from a population and housing sort of area that's supporting a lot of the greenfield areas and estates that are coming through. So that's really essential that that gets done. Like most infrastructure, it probably should have been done a few years earlier, but good that it's occurring now. And then on the electricity side, this is one that's increasingly important across most of the rest of the country. There is a whole host of things like solar farms and batteries and that sort of stuff, not necessarily in Perth, but into the regions that are coming through. And they have much larger dollar values now than what we would have expected if we were talking about that sector, say, 10 years ago. And we know that's all related to carbon emissions and electrification of the grid and that sort of thing. So that story's probably got a really long way to run still. But that's quite helpful because, like I said, it's not just in Perth. A lot of, especially if we think road and rail, a lot of that really is centred in Perth and sort of the outer suburbs. But when we start providing some work out into the regions as well, that becomes increasingly important, which is pretty valuable, I think, because we know that the construction sector has these really great multiplier effects that flow through the rest of the economy by the time you bring in all your ancillary services and that sort of thing as well. So that's a really positive story, and it's interesting to see that diversification within the publicly funded infrastructure story.
Yeah. Do you think we're doing enough to set ourselves up for the next 10 years? Or further, because infrastructure is really a 50 to 100 year play.
Yeah, absolutely. It should be. We should be thinking about that sort of time frame. In general, no. But that's not a criticism of Western Australia. That would be my answer for every state and territory. And I think the key thing there is that Australia's population growth has really caught us by surprise over the last 20, 25 years in particular. But that should stop being an excuse now, because we've seen over, let's just say, the last 10 years, our population was growing really rapidly before COVID. We turned off overseas migration for a couple of years. And I remember at the time, especially in Victoria, there was a lot of concern. What do these lockdowns mean? People are never going to want to come to Victoria and Melbourne ever again. And then what do you know? As soon as borders open, we've had an absolute flood of overseas migration coming into Australia. And, you know, it's pretty easy to see why. We're an incredibly attractive place to live here, even though that pains me as a Kiwi to say. But it's the lucky country for a reason. A wonderful place to be. And if you look around the world, in all seriousness, I don't think there's many places that most people would rather live than Australia. So it's no surprise at all that overseas migration is so positive coming into Australia. So we've got this track record now where there was a lot of overseas migration before COVID and even afterwards. Yes, there was a hiccup in the middle, but I think it's been demonstrated for a long period of time that there are so many people willing and able to move into Australia and contribute to our society. We should now be able to set pretty realistic targets for what Australia's population is going to look like in, like you say, 50 years' time. Starting shorter term, what does it look like in 5 or 10 years, but then working your way out. And I think that's probably one thing where there needs to be a bit more cooperation between levels of government. If the federal government is looking at overseas migration flows and visa approvals and that sort of thing, that really needs to be done in collaboration with the states, working out where these people are expected to move to and making sure that the infrastructure investment is taking place to allow those populations to settle in an efficient sort of manner. And I think that's one thing that we haven't done very well at all, building greenfield areas and then building a train line 10 or 15 years later just isn't good enough to set us up for success going into the future.
I'd put to you that the we isn't just government, it's we as a community in the whole country
Yes.
getting behind saying, okay, we may have to go into debt to do it, but we're going to have to spend multiples of billions of dollars to build major infrastructure
Yes.
so that we're set up for the future. Because if we don't, at some point, our cost of living is going to skyrocket.
Yeah.
It'll be less affordable for our kids as they go older and their kids.
Yes.
So taking a multi-generational view is what I feel we all need to embrace to a degree, not be silly about it, spend wisely. But it feels to me there's a narrative in the country. Every time we go to spend billions and billions of dollars, there's a community uproar
Yep.
driven by, frankly, I don't know what, to say, oh, why are we spending so much money?
Yes. I agree. And there's a couple of examples that I can talk to there. And one that came up when I was in Perth yesterday was around the new stadium. Well, it's not that new anymore. But the opposition to that, should we be spending this money, $1 billion, give or take, wasn't it? What else can we do with that money? And what else can we do with it is a fairly valid question. Maybe there are more pressing concerns. But then you look at it today, I think it was completed 2017 or 18.
Something like that.
So 8 years later, given what we know about construction costs, could we build that stadium today? Well, absolutely not for the value that we got for it 7 or 8 years ago. Prices, could well have nearly doubled in that time frame. So that's just one little example that gives you the importance of let's crack on and build these things before it becomes increasingly unaffordable for us to do so. The other example that I'd give is a Melbourne-focused one around the suburban rail loop. And so that's a train line that instead of having all the spokes running out from the CBD to the various suburbs, is a loop connecting sort of the middle of each of those train lines in a circular pattern. So we've got all the spokes, then you add the wheel around it. So that's an incredibly expensive project. It's meant to be around $200 billion. I think by the time it's completed in 25 or whatever years' time, it's going to be quite easily double that, to be honest. But then you also look at where Melbourne sits today, 5 or 6 million people in 50 years' time, won't be far off double that, potentially, 2% growth a year. And trying to jam 10 million people into a city with no public transport in a circular shape instead of funneling everyone into the CBD would be an absolute nightmare to try and coordinate. So that's the sort of future proofing that I think we probably need more of. But then I understand the questions around, is this the best use of money? Are there other things we can do? And that sentiment is pretty well voiced, I think, in Melbourne. There is a lot of opposition to that project, and I don't necessarily know if that's the absolute best answer, but that is a good example, I think, of the really long-term planning that we should at least be considering when we're thinking about the long-term vision for our cities. And that's especially important from a Melbourne point of view, because I don't think there'd be too many cities of 5 or 6 million people that don't have a rail line to the airport, and we still don't have a commitment for a date on that one. So that just shows you how far delayed infrastructure is across many parts of the country.
And that's quite incredible. And I do wonder how much future cost is figured into the commentary around, is that the best we can do with that money? Well, I agree, it's a valid question. But does it become more, is it answered more by ideology than by a business case?
Yes. And to be fair, that's where a lot of the criticism has come from, because the business case hasn't been particularly well presented. But that's probably a good lesson to learn, actually, that the stuff really needs to be open. And you're talking about, it's not just governments that need to be making these decisions, it's kind of the collaboration of the people. And I completely agree with that point. So if we're looking at spending $200 to $400 billion on a project, it absolutely should be fully analysed by all different levels of government, private sector as well. Do we have the skills that we need? So many tunnelling requirements that Australia isn't really an expert in. That's still a relatively new industry for us, where we're getting a lot of expertise from overseas. how do we get more of those resources? Is there training and education that we need if we're taking a genuine long-term view? And that means looking beyond the short-term 3-year political cycle, I think.
Yeah, and we do have the skills and capability to project what the potential costs would be, cost of living impacts
Yes.
in 30 or 40 or 50 years.
Yeah.
So I can't understand why that's not done. And if it's done, why it's not shared.
That's beyond my pay grade.
Oh, maybe. Can you fix that next week, please?
When I go back home tomorrow, I'll just call up the Vic Premier.
Thanks, Daniel. Have a chat, would you?
Yeah, you're welcome.
Yeah. Industrial. We don't often get the opportunity to talk about the commercial property space and industrial property. And given you're an expert in it, love to hear your views.
Yeah.
Residential gets all the limelight.
Absolutely.
Yeah.
Yeah. And industrial is a really interesting one because that was totally the ugly duckling of the commercial space as recently as 7 or 8 years ago, I would say. It was coming into favour a bit more before COVID as online retailing was increasing in prevalence. But then COVID really lit a fuse under that, and we've seen that the share of people spending online has continued to increase. And one of the fun facts that I've been throwing around is that now the share of online retailing is a little bit higher than where it was during that first lockdown 5 years ago. And if you think about how different the world was 5 years ago, 2020, we had our lockdowns. It felt like everything we were doing was spending online. And that's actually where we sit today in terms of the share of retailing. But then the dollar value of total retail has continued to increase as well, in line with the economy and population growth. So there's really a couple of tailwinds there. If you add all of those together, it means that the dollar value spent on online retailing is increasing at a very, very rapid pace. And Australia Post actually do a good report every year on online retailing. And what that showed at the end of last year is that around 1 in 5 households purchase online at least once a week. So that sounds like a pretty strong number. No doubt that's a lot higher than where it was a few years ago. But also to me, that just screams opportunity. What's stopping that 20% becoming 30, 40, 50% purchasing online at least once a week? And the report delves into some really cool details around generational or demographic shifts there. It's not just millennials and Gen Z that are buying online. Obviously, they're pretty prevalent because they're the most comfortable with technology, but it really is working its way up as well. Generation X has a really strong online presence now, and the baby boomers are getting involved as well as they become more and more comfortable. So that's really cool to see. And the other one that's helping that sector too is the fact that the supply chains and logistics are broadening beyond just the capital cities, and it's really coming out into the regions as well. So we're seeing that the online penetration into regional Australia is increasing at a pretty decent pace as well, and it actually increased a bit faster than the metro regions last year, which is a pretty cool result. So when you put all of that together, again, I always, economics background, strip everything back to supply versus demand. The demand for online retailing and the associated storage and warehousing logistics requirements have just gone through an incredibly strong period over the last couple of years. So that's why if you look at industrial property, rents have increased so sharply. In Perth, they're up about 50% in the last 5 years. Sydney's leading the way. Rents for industrial property in Sydney are up somewhere between 60 and 70%, and most of the country is in that 50 to 60% band as well. And that's on the back of, like I say, really strong demand growth, but also an ability to bring supply to market for all of the same reasons that the housing sector is challenged. We just don't have the workers to bring more industrial property to market over the last couple of years anyway. That's slowly going to change though. We know that building approvals for industrial property look really strong at the moment.
Is that in Perth?
In Perth, yeah, absolutely. It's the first time that we've seen approvals have been so much stronger in Perth for industrial property compared to retail and offices. Retail and office approvals are very soft at the moment. but industrial approvals have just continued to increase. So the big question there is, can we deliver that product, and how quickly can we do so? And the answer is probably not very quickly at all, but it will come eventually because it has to. The demand is just so strong, but there will be some challenge bringing that into market. But if you look at the underlying demand dynamics, the future still looks really, really good for industrial property.
And still fairly tight, I would imagine, because as the population increases and the demands for goods and services increase, more industrial property is required.
Yep.
I have clients now, they're looking to move their business into their own property simply because rents have gone up 50%. And they're saying it's better for me to buy that in my super fund.
Yes.
As a common example.
Yep.
I'll buy it in my super fund and pay rent to myself rather than rent, but they can't find a suitable premise.
Yeah, absolutely. And same story from a banking point of view. We hear examples of that pretty commonly, not just in Perth, but across the country, really, where when you're faced with, market rent reviews of 15 or 20% or something, that's a pretty bitter pill to swallow. So taking a bit of control over your own asset starts to look really attractive, I think, even though you'll be paying a decent price for it, right? Because I mentioned before that industrial was the ugly duckling, really high yields, looked really affordable, but those yields have come right back down. They've really halved, give or take, over the last 7 or 8 years. So it does mean that you're paying more, of course, for the actual asset, but to give you the control and the certainty, I absolutely see why, your trading businesses are looking to make that sort of move.
Let's talk retail, bricks and mortar for a moment, because you're saying the retail sector's buoyant, online's taken off, and seems like it's got a really good, healthy trajectory.
Yep.
What are happening to all the bricks and mortar shops?
Yeah. That's a really interesting one because it kind of depends which sort of bricks and mortar shops that you're talking of. The CBD has been a little bit challenged over the last couple of years. Rents are down just slightly in Perth, but if we apply our national lens, we can see that CBD rents in places like Melbourne and Sydney are off about 40% from 5 years ago. So the CBDs there have undergone this huge adjustment. They're mostly through that now because the correction in rents means that it's actually quite feasible for new businesses to come into the CBD. And so what we're seeing is that the vacancies in Sydney and Melbourne have really started to dry up now. More and more businesses are taking that space, which is really cool to see. But for asset owners, that is coming at a cost of much, much lower rents. For Perth, like I said, the CBD hasn't been impacted that badly, but rents have come off just a little bit, which is obviously quite different to what's happening in the industrial space. But then where the news gets better for retail is things like neighbourhood shopping centres, and that's where you might be anchored by a supermarket, a Coles or a Woolies, or increasingly an Aldi as well, and then maybe a bunch of specialty discretionary retail around the outside, that sort of thing. They have performed pretty well. They've been a really nice, steady pillar over the last 5 years. They haven't had the massive upswing of industrial, but they've been just a nice, steady, secure asset class, which has been quite attractive from a banking point of view, and therefore I think a lot of investors are starting to look at that space as well. Similar story for your large format, bulky goods, your homeware centres and that sort of thing. Have really been nice and steady, I suppose. And I don't mean that in a boring, derogatory way. I mean that given the uncertainty and instability across so many parts of the economy lately, a bit of stability actually looks really attractive. So there's definitely demand for those segments.
It's great if you're a business owner, isn't it?
Yeah, absolutely.
You go, okay, that's reliable.
Yes.
The trajectory is good.
Yes.
The demands for the goods are still there. Okay, it feels safe-ish.
Yeah, that's absolutely right, especially when it's tapping into your non-discretionary spending, like your supermarkets, for example. We know that total retailing has been increasing at a decent pace. It's slowed down a little bit lately, but from the supermarket's point of view, that story is just absolutely rock solid. So if that's sort of one of the key tenets that you're looking at in these assets, I think you're pretty well positioned on the retail side.
Fantastic. So at a high level, Australia's we're doing okay.
Yeah.
we've got a good trajectory ahead. We're pretty well placed as far as the world is concerned.
Yes.
In Perth or Western Australia, you say our trajectory is good. Give me a quick snapshot summary of where you think we're strong and where you think we might be challenged.
Yep. The strength from a Western Australian point of view. Yeah, okay. So the strength here is, like I mentioned before, you've got the combination of the private and the public sector driving in tandem. Quite often that's not the case, and you might see when the public sector is accelerating their spending, that's because the private sector is weak. That's not really the case here. There is genuine public spending and commitments taking place while the private sector looks good. The private sector is being driven by reasonable commodity prices, not shooting the lights out like full mining boom style, but enough to keep activity and exports really encouraging. But it's not just a mining story anymore. That's still a huge part of the Western Australian economy. And the question always comes up, how and when will Perth or Western Australia diversify away from mining? But that's almost impossible at this point because it's such a huge part of the economy. You don't want that to shrink, obviously. So it means you need another industry or two to double or triple or quadruple in size. And that's a very, very tough ask. I don't think there's many examples of that at all, certainly not from an Australian point of view. But what we are seeing, and this gives me a bit more encouragement as well, is the diversification within the mining sector. So 15 years ago, it was all just iron ore. Not just iron ore, but, it's a really impressive story, but that was absolutely the main event. And then that evolved into LNG being increasingly important as well. And if you look at the way that those industries over time have ramped up, it's been absolutely incredible, the volume of production and exports and the revenues associated with that. And then more recently, really in the last 5 years, you can see this acceleration in your critical minerals as well, the likes of lithium and cobalt and so on, where it's still really early days for those industries, I think. But again, if we're taking a nice long-term view, the story globally around electrification, like I mentioned before, the demand for batteries, for homes, for cars globally, at the moment really just seems to be heading in one direction. And if that continues over the longer term, Western Australia, again, is really, really well placed to take advantage of that, even though that's still within the mining sector. But that diversification buys you a bit of insulation, I think. If iron ore prices drop, that's not great, but they have fairly different demand dynamics compared to lithium, for example. So that gives you a bit of protection for the years ahead. So that's really important. So that's probably the good news stories is the private versus public sector and that diversification within mining. Was your question around challenges?
Where are we challenged, do you think?
Yeah, so the challenge comes back to, and this is really an Australian-wide answer, just how exposed we are to the global economy, because everything can be going really well at home. And generally, I think, especially for Perth and WA, things are going as well as we could hope for at this point in the cycle. But then it doesn't take too much, like we've seen over the last month or two. Events overseas really can derail progress that we're making on the domestic front. And so while I said, yes, this diversification within mining is really helpful and it buys you some insulation, it still doesn't really help if China and US issues continue to rise and China goes into recession, for example. That's really not going to be great news for Australia and for Western Australia too. So the challenge there becomes, well, I've spoken about diversification within mining. Are we able to diversify our trading relationships, for example, away from China? And we haven't done a very good a very good deal of progress in that space, I suppose, in recent years. China is absolutely still the largest trade partner for us. Some areas are increasing. The likes of India is becoming larger and larger and more important year after year as well. So that story will help, but China's still a very large piece, and it does leave us a bit exposed to what's happening there. So that's really one of the key challenges, I would say, going forward. And then the other piece, and this is a bit more granular, is really just comes back to the construction piece. We know how much we need to do to support infrastructure for population growth, to support housing, improve affordability and all of that good stuff from a society point of view, but we just don't have the resources to deliver that. And unfortunately, I'm pretty pessimistic about our ability to improve that over the near term as well. We don't have a good track record of importing exactly the right skilled labour that we need and recognising qualifications correctly as well. And if we're looking at upskilling younger workers, we can do a better job of that, but that just takes time. So it's not really a short-term fix at all. And I'm not sure a short-term fix on the construction side exists. So they're really the two main challenges I'd talk about from a Western Australian point of view.
Yeah, both fixable in my view. One's longer term.
Yes.
And the shorter term is it's a skilled migration with qualifiers around it.
Yep.
Which is not, there's nothing new in any of that.
No.
But as you say, I don't think we do it particularly well. One more question, if I may.
Please.
Agriculture in Western Australia. I don't think we talk about it that much, but it's pretty decent.
It is.
And I feel like we've got massive opportunity.
Yeah, I agree. I'd throw the Northern Territory into that bucket as well. It doesn't really get spoken about, but is a large part of both state economies. The opportunity piece is really fascinating because everything from coming out of Australia has such a well-deserved reputation for quality overseas, especially into the Asian markets. So that's really important and something that we can do a good job of going forward. And we already have, to be fair. We've built up the reputation over time, and I think that'll continue to come and leaves us in pretty good stead. But then, of course, if we're thinking about around challenges, it all comes back to your rainfall, for example, temperatures. And that's really, if we're thinking 50 years' time, how certain are we that the climate is going to be conducive to that story as it is today? Whether we can do something about that, I'm sure we can, but that's maybe a much, much bigger question than my area of expertise.
Well, we might loop you in on another podcast because we're going to delve into that.
Fantastic.
I've got some ideas, and I know some people in ag who can see the future,
Okay.
or see a possible future. And there's some infrastructure to spend there, but I agree. Ag's done a great job of positioning Australia on the international stage. The question now is, we're well positioned. What are we going to do with it?
Yeah, absolutely. Because we've got all the space in the world and the resources to, ramp up that production quite significantly if we're willing and able to. Again, if we have the workers for it.
We'll work it out.
Yeah.
And when you go home, talk to your premier and you sort that out. The end out, we'll sort this end out. And we should be okay.
I will. I'll drop your name in there. I'll say,
thanks,
Hanif
mate.
says this is what you need to do.
And I'm sure they'll listen just because I said so.
I've no doubt about it. You're very persuasive.
Yeah, thank you. Look, thanks for your time.
Oh, you're
that was
welcome.
super insightful. And it's wonderful to have somebody who's not just an economist. I'd call you a practitioner.
Sure.
Come on and share some real world insights with us.
That's wonderful. Thank you so much for having me. I've had a great time. And hopefully there was something useful in there for your audience.
I'm sure there was.
Thank
We'll
you.
rope you back in another time.
I'd love to.
Yeah, wonderful.
All right.
Thanks, Daniel.
Thanks a lot, Hanif. Cheers.
All right. See ya.